In this video, I'm going to give you my shares portfolio update. So in the previous video, I did mention about how I had a negative experience with shares and they actually reached out to me, which was very nice of them. I actually met with a product manager online and we discussed the future of shares, and it was a very good experience, and I feel like companies should do that more often. They took my feedback on board, they apologized and admitted that they were wrong. So we're off to a good start for a company like Shares to make amends to some of the concerns that might occur. So I thought that was really good of them. But anyway, let's get straight to the portfolio. So when I open my shares portfolio, I can see that I have £21.15 for the value of my portfolio. And in the past day, I'm in the green, past week, slightly red, past month, red, past year, red, and overall I am down. And that's to do with the fact that currently we are in a bear market. I made a video over here which explains why probably all your investments, if you started recently investing, are in the red and why they're going to be red for the coming future. But anyway, if I go back today, we can see that we're back in the red. This is because the stock market is still open and there's going to be fluctuations as I film this. So if you're new to the channel, you should know that my shares portfolio isn't representative of my total investment holdings. I put a very small amount, for example around £20, and this is so that it can be representative of the average beginner investor who doesn't have tens of thousands or hundreds of pounds per month to put into account. And honestly, shares is a good platform to begin to start investing with as little as just £1. I'm actually very surprised by some of the stocks that I've picked on this portfolio because they're doing really well. So let's go in the opposite order from the worst to the best. So as you can see, Alphabet, I have 0.1 shares in Alphabet, and that is down a huge 21%, which could signal a very good time to buy something like Google, which is down 20%. As you can see, over the 5 years, it's made a huge downturn, which means in the future there's potential for lots of growth. So like I always say, investing is for the long term. I don't actually recommend you buy individual stocks, but if you're new to investing and you want to try out investing with very small amounts of money, it is good to get into the habit of investing, buying stocks and seeing that there is potential for growth in the future. Therefore, that might incentivize you to learn more about investing, put more of your savings or your extra income into investing, and ultimately build more wealth for you in the future so that you can retire early, or whatever you want you can spend it on. So shares makes it very easy to buy very small amounts. So you can buy $1 amount, £1 amount. It's very simple. So one of the reasons why Alphabet, which is basically Google, is going down, and also companies like Meta, is because advertising rates have gone down so much since the beginning of the recession. So advertisers aren't paying as much for their adverts to be shown to people because they know that inflation is high, people are earning less money, they have to make decisions between eating or heating, so they can't really afford to spend more on luxury items or whatever items they see on adverts. So in turn, big companies are spending less on advertising. Companies such as Google, which relies a huge amount on advertising for its revenue, that side of their revenue is going to go down, which means their future growth will be lower, meaning less profits, meaning their share price goes down because investors feel like they're not going to get their return in the future. Next we have Apple, which I have 0.01 shares of, and that's down by 12%. So tech companies are usually one of the first to fall down when a recession begins, but we're already technically in a recession, so tech companies like Apple and even AMD have suffered first because of the way tech works, the way their income works. It's a good indicator of a recession when tech companies all jointly actually fall down together. Next I have Colgate Palmolive, and I have 0.01 shares of that, and that is down by 4%, which is quite a decent amount. Next we have Starbucks, so that's 0.01 shares, and that's down by 3%. So the reason why I bought Starbucks is because during recession these companies usually do well, because even during a recession people still want their coffee, they still want that one item that they can go towards, they can buy, which doesn't cost too much money, that makes them feel better about themselves, that makes them feel less lonely, and all these sorts of things. So Starbucks can usually be one of these recession proof or recession compatible companies that doesn't really feel the brunt of a recession. So surprisingly, very surprisingly for me, the rest of the stocks are all in green. So first we have Procter & Gamble, and Procter & Gamble are an umbrella company of many brand names that you ought to know, that you probably will know. So again, this company is almost recession proof because people always need household items such as cleaning products and brand name food, so Procter & Gamble can supply these. And as you can see, over the past 5 years it's not been doing too bad. However, it is down around 6% year to date, but such a company doesn't really get too affected by a recession, and it is actually up by 0.1%. Next is Pepsi. You must have all heard of Pepsi. I have 0.01 shares, and that is up by a big 2%. So again, Pepsi is one of those companies that people are still going to buy Pepsi, they're still going to buy Coca-Cola because they need this during a recession, especially when people are cutting down on other costs. They don't want to cut down on their drinks costs. So Johnson & Johnson, I have 0.01 shares of Johnson & Johnson, and that is up by around 2.8%. It's moving right now, so the exact number I can't give to you. Coca-Cola, I have 0.02 shares, and that's up by 5%. So Coca-Cola, Johnson & Johnson Johnson, PepsiCo, Starbucks, Procter & Gamble, they're all dividend companies, which means that by holding their shares, you actually are entitled to a small dividend that is paid out usually 4 times a year, so every quarter. And the reason why I bought these companies is that I have a pie, so an investment pie in Trading 212, which invests in 50 companies and aims to give daily dividends. And I've chose the best ones from there to invest onto here because I feel like we will see actual growth during the recession. Remember, this video is not financial advice. If you want to make trades in some of these companies that I mentioned, you are free to do whatever you want, but just realize that your capital is always at risk. There is no guarantee that these companies are recession proof. There's no guarantee that these are not going to crash the next day. Although companies like Johnson & Johnson have been around for a long time, even Coca-Cola, and they are unlikely to do so. But remember, don't take advice from a random guy on YouTube for your finances. You wouldn't ask a random guy on YouTube to drive your car for you around the UK or wherever you live, right? You just wouldn't do that. So your finances are just as important, so why take advice from a random guy, right? But anyway, I have 0.02 shares of AMD, which is up by a huge 6%, which is funny because it was yesterday when they released their profit and revenue numbers and they missed their profit goals by a huge amount, but for some reason the stocks went up. And AMD is one of these companies who had taken a massive fall this year, but since buying this company it has gone up. And the reason why I bought AMD is not because it was a dividend company, but because I knew that at that price which it had fallen down to, it was a very good value, and for the long-term hold, it in my opinion is a good thing to do. The next company is 3M, which is also a household name. They make all sorts of stuff from like sticky tape to things that you'll see around your house, and that is up by 7.7%. Again, another company which I think is kind of recession proof because you need these items regardless. So the next two and the last two stocks are doing very well. So the first is McDonald's, which says I have 0 shares, but I actually have 0.0046 shares, which is a position value of £1.14. So this has gone up by a massive 14%. So you could only imagine if you put in £100, you would have been up by £14. But again, your money is always at risk. Don't listen to my advice. This is just my portfolio. So McDonald's is up by a massive 14%, and again, quite a recession proof company because regardless of recessions, people still eat. People love McDonald's. It's a comfort food, and comforts always go hand in hand in recessions. And last is Caterpillar, which is up by a massive 20%. And Caterpillar sell clothes, they sell stuff for construction and mining. I'm not exactly sure what the reason for Caterpillar going up so much is, but they have done that, and that's good news for anyone who has invested in Caterpillar and wants to keep investing in them into the long term. Make sure to check out some of my other videos, and I will see you in the next video.